Prince Dykes. This is Royal Financials. Today's topic is going to be about how can I find and take advantage of opportunities in the market. A lot of times the market is stabilized or it's declining, and you ask yourself, how can you make money, or how does people make money, or investors or day traders, how do they make money by when the market is stable or it's declining? So I'm going to give you a step-by-step video of how to find those pockets and also how people capitalize over them. So stay tuned. So let's say in 1995, you let's do a 1995. You invested. Let's say a stock was trading for, hypothetically speaking, $20 a share. Excuse my hand right here, but bear with me. Okay, $20 a share. So for $20 a share, let's say this was in 1995, right? Let's write a 95 here, just to show this is the year. So this is the year. I'm gonna circle the year, right? So this is the year that you invest $20. So let's say the market does this, right? You see this, little squiggly line, and it drops, and it goes up, and it stays here, then it moves. So let's say the market looks like this, right? Pretty unstable. Does this for, let's say, I don't know, let's go over a course of to 2000. So here, this particular area, right? Here, the stock now is trading for, let's say, $22 5 years later, right? This started in from 95 to this year here is 2000. So I'm gonna put a 00 here to represent the year for this. So I'm gonna circle that too, so it won't be too confusing. So from here, in a 5-year period, you essentially gained about $2 per share. So you invested $20 here, and then now you invested $20 over here. Let's circle that. And 5 years later, that same $20 is now worth $22 per share. So I mean per share. So the average person, when they look at this, they'll be like, wow, that's not a lot of gain. So when I look at something like this, I see some pockets of opportunity. Let me change my chalk here so people won't get confused. So from here, I see some pockets of opportunities. So you can see here, there's a big dip, right? Here, there was a big dip. So if this was $20, that means that this probably was 18. Where this purple chalk is, it probably was 18, and then it shot up. So here, this is where this was a pretty major jump, right? So from there's a pretty major jump. From here to there is a pretty major, to here is a pretty major jump. And I look at these things as opportunities. I was like, well, wow, if I could have brought in this particular area here, if I'd have brought here and then sold it here, because let's say this represents 25. Oh, make sure I got that right. All right, so it said this represents 25, and this here represents 18. 18, right? 18. So $25. It went from $18 to $25, which is a $7 jump. So let's say somebody who just in 1995, you just say, here I have $5,000, and boom, I just throw it inside of this stock, which is not a bad deal. And you just kept it here from 1995 all the way to 2000. You just kept it, right? So while your money is there, it went up a little bit, went down a little bit, went up a lot, went up a little bit, went up and down a little bit. Then, in 2000, 5 years later, your money has gained some value, but it hasn't maximized its potential. I look at this. I look at things like this to say where you can maximize your potential in a particular stock. So if you would have, maybe brought more when you see it drop, these pockets here, you can buy more and then you can sell at the top. These are things that day traders do. They say, wow, this stock is pretty low. Let me buy some more. I originally brought it at $20, but now it's trading at 18. I'm going to buy some more here. Then when it hits $25, I can sell it. Then it dipped down again here, and I can buy some more right here. Wait till it goes up and down, goes up and down, goes up and down. Then boom, it hits up here to maybe $27. This may represent, Let's say this represented $27. So let's say you're going along and boom, boom, 1997, you see it drop down to $18. So you buy some more. Then in 99, you may see it jump up. So boom, you sell it. Then you turn around and you buy it again when it's down here. Then you sell it up here. So these points here, these what I'm marking with the purple chalk, is where day traders and uh, active investors find pockets or ways to make money. Even though this stock here hasn't really changed that much in 5 years, it only increased by $2. It hasn't really changed that much. So this is how ways of people see investments, right? Me with my own eyes, this is the way I can see as an active investor ways I can see I can make money in a particular area by seeing the market go up and down. Now, another thing you can do, that's just the basic. Another thing you can do if you get into option trading, when you see the market go from here to $27, and let's say if it drops down to here to $20, if you brought puts against this, because you also can buy against the market. If you brought puts on this decline here, I'm going to drop my pink chalk here. On this decline here, you could have made money as well. So there's all type of ways to make money, even in the market. You don't have to see this steady line I'm drawing here with my, some people are like, hey, I invested here, then it shot all the way up to here. That's what people like to see. Hey, it was here, then it shot way up to here. So even though this little wiggly line here, you still can make money. And I just want to show you guys opportunities or ways to make money when the market is pretty stable or it's not doing so well. Thank you guys for watching. All right, guys, thanks for watching. Hopefully that helped you guys out. And don't remember to subscribe to our YouTube channels, follow us on Facebook, and stay tuned for our website. As always, thank you guys for watching.